Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 377 on May the 30th, 2025. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on AMC Entertainment Holdings, Xpeng Inc., and Freeport-McMoran, and we discuss three new trades on SoundHound AI, DraftKings, and C3 AI. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. The stock market finished this short week higher. The Dow Jones Industrial Average gained 667 points, closing at 42,270 points on Friday. The S&P 500 index picked up 108 points, ending the week at 5,911 points. And now it's time for the topic of the week. The topic of the week is avoiding pain. It's been proven time and time again that most people will do more to avoid pain than they will do to gain pleasure. It's something about the human psyche. It makes pain just seem far worse than it actually is. I've seen people make bad decisions to avoid pain, but those same decisions cost them the possibility of gaining pleasure. And that's the way I look at trading. There's always a possibility of loss, but some people would rather avoid that possibility altogether rather than move towards the pleasure of making gains in their portfolio. There's also the notion of misery-loving company. Now, when the stock market goes down and people take a hit in their 401ks and their portfolios, even though they feel pain, it is less painful because the entire group feels pain. If my portfolio took a loss, chances are yours did too. And that's how those things kind of go. Very few people consider using options to buffer their portfolios. You can sell call options against the stock you own. You can sell put on stock that you would intend to buy in the future before buying it. You can sell calls above the stock price of stock that you own and buy puts way below the stock price to create a hedge on stock that you currently own. So there are a ton of ways to limit the pain of loss on a stock portfolio. Most people fear the pain of losing money on their derivative portfolio altogether, and I'm no different. The pain of loss can sometimes outweigh the pleasure of gain, for sure. That's why I like using trades that define the maximum loss and the maximum gain right up front. I don't always use spreads, but they are a wonderful tool for helping to balance out my emotions when it comes to trading. So whether you're like everyone else and allowing the pain of loss to limit your pleasure-seeking behavior, or if you're one of the few people who can focus on the attainment of pleasure rather than loss, spreads offer a great way to define both and keep your emotions in check so that you can make some money. Now, the fear of derivatives that I hear on television sometimes is completely irrational. It simply comes down to mathematics. Hopefully, if you've been listening to this show, I've proven that to you. Don't allow the fear of loss to control your trades. Quantify that loss. Move forward with good decisions based on data, not emotions. So that's it for the trade review for this week. Let's go ahead and dive into the review of last week's trades. Now, we're going to start off with the covered call on AMC Entertainment Holdings. That's A as in Alpha, M as in Mike, C as in Charlie. At the time, the stock was trading for $3.23 per share. I looked at buying that stock and selling the June 3/2 call at 28 cents, hoping for a return of 17% over 4 weeks. Now, shares of AMC grew 32 cents, ending the week at $3.55 per share. The call option that we sold gained 12 cents, leaving us with a 20-cent gain if we were to close the trade out immediately. Now, in general, we don't close a trade out that's working this early. Our profit target on this trade is almost 3 times that amount. So I will not look to exit at this point. There are still 3 weeks left in this trade, so no adjustments are needed at the moment. As always, if you have an open trade, you need to track the stock and make sure that the trade is performing as planned all the way through expiration, which is 3 weeks from now. Next up, we have the credit spread on Xpeng Inc. Symbol X as in X-ray, P as in Papa, E as in Echo, V as in Victor. At the time, the stock was trading for $19.97 per share. I looked at selling the June 19 put spread at 17 cents. That could give us a maximum possible loss of 33 cents per spread. Well, shares of XPEV lost 66 cents, ending the week at $19.31 per share. The out-of-the-money put spread that we sold is currently at the money, with the stock price nearly halfway between our strikes. Now, the stock price is currently 2 cents below the break-even point, which means the trade is currently priced to take a small loss. You would be perfectly within reason to make an adjustment if you like. That could be something like collecting 12 cents to sell the 20 and a half call spread and then turning this into an iron condor. That would increase your total capital received to 29 cents and lower your maximum loss from 33 cents down to 21 cents. However, it also just about guarantees a loss if this stock rallies and closes higher in 3 weeks. So I often prefer to hold for a few more days just to see whether this stock price is going to return higher or continue lower. Either way, we have some time, and that gives us the ability to make an adjustment as needed or to simply be a little patient and wait for this trade to return to profitability over the next week. Next up, we had our debit spread on Freeport-McMoran, symbol F as in Foxtrot, C as in Charlie, X as in X-ray. At the time, the stock was trading for $39.01 per share. I looked at buying the June 38.5 call spread for 33 cents. That could give us a maximum gain of 17 cents, or that's a 51.52% return in 4 weeks. Thank you first off to Bob in Florida for pointing out that on last week's show, I gave the wrong symbol for this trade. I gave the wrong symbol even though I notated it correctly in my trade journal. Now, I typically try not to just make up symbols on my own, but every now and then I prove myself human and I slip up. So thank you, Bob, for writing me once again, letting me know. And I also, I love knowing that you were listening. I love the fact that you felt comfortable enough letting me know that I'd made the error. And it's also just a reminder to people out there, I actually read my emails. So feel free to reach out to me. I normally don't call people out on the show, but hey, Bob did me a solid and it's keeping me from making the same mistake. Like, I just completely made up a symbol. It's not a made up symbol. It was a symbol for another company. I'm not going to repeat it, but thank you, Bob, for getting me back on track. So let's move forward. Shares of Freeport-McMoran lost 53 cents, closing at $38.48 per share. The in-the-money call spread that we bought is now out of the money, and we would lock in a loss of 14 cents if we were to just close this trade out early, which is always a possibility. Now, again, we have 3 weeks until expiration, and the stock price is only 40 cents away from our break-even point. And of course, this stock is $38 stock, so that 40 cents has to be taken in, relative to the total price per share. Now, again, you are well justified to make an adjustment. The stock chart makes me a little more patient on this trade as it's been inching higher since April. However, if we were to make an adjustment, I might turn this long spread into a short spread by collecting 41 cents to sell the 38.5, 39.5 call spread, and then I would look to sell the 37.5, 37 put spread at 12 cents, turning the entire spread into an iron condor and collecting a net total of 20 cents for the iron condor. That would leave us with a maximum loss of 30 cents on the trade. Now, our current maximum loss is 33 cents, so you're making a lot of trades to basically lower your maximum loss by 3 cents. Now, I personally will exercise a bit of patience to get a better sense of where this stock is heading over the next week. So before I make any adjustments, I just want to get a better sense of where this stock is going, because if it does go higher, I really want to give this trade a chance to breathe. I want to lock in that higher stock price and get a profit out of this trade rather than fearing a little bit of loss, hedging it out early, probably locking in a larger loss than I would take if I just held on to the trade. So again, I use math to try to calm my emotions, right? by calming my emotions, I can look at the numbers and just make a better decision and say, hey, do I want to go ahead and turn this into an iron condor, which might save me $3 in general, or do I want to just hold off a week or so and see what's going to happen in this market? So $3 doesn't go as far as it used to, so I'm happy to hold off for a little longer before making an adjustment. So that's it for the review of last week's trades. All new trades on today's show will use the June 20th expiration for monthly options in June. So let's go ahead and dive into our 3 new trades. We're going to start off with the cover call on SoundHound AI, symbol S as in Sierra, O as in Oscar, U as in uniform, N as in November. The stock ended the week at $10.11 per share. I'm looking at buying that stock and selling the June 10 half call at 68 cents, hoping for a return of 10.58% in 3 weeks. Now you enter this trade by buying stock for $10.11 and then selling the June 10 half call at 68 cents. This trade makes the most money if stock prices finish above $10.50 per share. The break-even price on this trade is $9.43 per share. In real terms, the stock purchase will require $1,011 and you would collect $68 for selling the option. Next up, we have our credit spread on DraftKings Inc., symbol D as in Delta, K as in Kilo, N as in November, G as in Golf. The stock ended the week at $35.88 per share. I'm looking at selling the June 38 half 35 put spread at 16 cents. That could give us a maximum possible loss of 34 cents per spread. Now you enter this trade by selling the June 35 half put at $1.16 and concurrently buying the June 35 put for $1. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $35.50 per share. The break-even price is $35.34. In real terms, you would receive $16 per spread that you sell and have $34 at risk. Our final trade on the week is a debit spread on C3 AI, symbol A as in Alpha, I as in India. The stock ended the week at $26.59 per share. I'm looking at buying the June 26 half call spread for 30 cents. That could give us a maximum gain of 20 cents or a 66.67% return on capital in 3 weeks. Now you enter this trade by buying the June 26 call for $1.80 and concurrently selling the June 26 half call at $1.50. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $26.50. The break-even price is $26.30 per share. In real terms, you'll pay $30 to enter the spread, and your maximum gain is $20 per spread. So that's it for this week's show. Thank you guys for listening. Thank you for sharing the podcast. Thank you for the emails I received during the week. Bob is not the only one who emailed me, so I appreciate hearing from all of you. So keep it coming. It brightens my week. I hope this show brightens your weekend and your week. Hey, have a wonderful weekend. Enjoy summertime. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.